And for more on this, we're going to bring in Alonso Munoz now. He's the Chief Investment Officer with Hamilton Capital Partners, and he joins us live. Good to see you. Thanks for taking the time.
Lindsay, good to be here.
So we are, of course, watching this meeting that's going to happen at the White House today and watching what's going to happen with the markets in reaction to that. What are you looking to see when we see Carney and Trump come out of that meeting later today? What are you hoping to hear?
Well, good morning. Hopefully a deal. I mean, I know you guys talked a little bit about the expectations going into this meeting and some of the framing of this meeting, but we think a deal would be good for the markets, both for the U.S. and Canada. We just saw some data from Canada that exports were worse than expected. And so from a market standpoint, I don't think we get a huge reaction. The markets have been relatively sanguine to some of the tariff disruptions, specifically since Liberation Day. But it would be nice to, have the two countries come together and make a deal. And I think President Trump is inclined to do so, although he's been very tough and the administration negotiates very tough. So we'll see the outcome of that. And we're going to be watching that closely and how that impacts the markets here in the U.S.
Yeah, I mean, here in Canada, the trade deficit, $6.3 billion, as you mentioned, in the month of August. We're seeing those numbers come out today. Employment, jobs numbers not looking great for Canada either. How significant is it to the economy to have a deal made today? Like, how much would that change things?
Well, I think going into next year specifically, I think improvement in the data, specifically if we get back to some of these deals that put both countries in a good position. Obviously, Canada and the U.S. have had a long-standing trade relationship, as well as Mexico. So this would be positive. We're starting to see, you mentioned labor data, we're starting to see some weakening in the labor data here in the U.S. as well. And that's something that has kept a lot of investors and economists, analysts on edge as we go into the Fed meeting at the back half of this month, or at the end of this month, on expectations for rate cuts as well. So, and not to mention adding on the government shutdown as well. So labor market, not only here in the U.S. and Canada, we're going to be watching that really closely, and it will be impactful on how we make decisions, specifically as the economy potentially weakens if we don't get deals and if the labor markets continue to deteriorate.
Obviously, the CUSMA agreement has kind of buffered a lot of those tariffs that Canada might have seen if it were not for that free trade agreement. But there are certain sectors that have been really hit hard, obviously, by these tariffs. Is there a certain sector that you feel Canada needs to maybe have some relief on in terms of tariffs?
Well, I think, Lindsay, the focus today is going to be on steel. It's going to be on aluminum. It's going to be on heavy trucks. I mean, it's going to be on commodities. And just the expectation that a deal is going to get done, I think, would bring some optimism to the markets, specifically as we close out this year and going into next. I believe that Canada is one of the only countries in the G7 that hasn't struck a major deal with the U.S. And so it is something that is top of mind. We're glad to see the administrations come together here in the U.S. and Washington today. And again, we're going to be watching that closely and seeing how that impacts not only Canada, but our U.S. markets as well.
There is the news today as well of Trilogy Metals and the U.S. government putting a 10% stake in that company. That's a Vancouver-based company. It's the second Vancouver-based mining company that the government has put a stake in recently. How beneficial do you think this is in terms of maybe strengthening ties between the two countries?
Well, I think you hit the nail on the head. It brings us a little bit closer together. It was an interesting deal because it really emphasizes the president and the administration's emphasis on national security, specifically when it comes to critical minerals, things that power this AI enthusiasm, the trade chips, basically the infrastructure and the inputs to a lot of the infrastructure that's powering the AI momentum here in the U.S. And the administration, again, is highlighting national security, specifically as we look overseas at China and their dominance in the critical mineral space, So this is interesting. I think it brings us, maybe it's a bit of a leaf to bring us closer together, and it's something that we're going to be watching. It was an interesting stake that the government took.
Yeah, it is, because, I mean, you hear Donald Trump talk about how he's looking to take business away from Canada, but he's also obviously very competitive right now with China, particularly in the precious metals area when it comes to, growing AI and trying to take the lead there. It seems as though Canada could be an ally for the U.S. in that battle rather than, I know people keep using the word punching bag.
Well, yeah, definitely. And there's a fluidity to the way they negotiate. I mean, these are not binary negotiations where someone wins and the other side loses, or zero-sum game, if you will. There's some fluidity and there's some leeway for Canada, Mexico, the U.S. to come together and put some good deals in place, specifically as we look overseas, where some of our other trading partners also have competitive advantages on things like critical minerals. And the U.S. has placed such an emphasis on AI, on data centers, on onshoring some of our critical supply chains, that this is a positive step. It's a step in the right direction for the U.S. and for Canada.
Do you think there's also a world, though, where Canada and Mexico need to start looking in the future at bilateral agreements, like more bilateral agreements between the two?
We'll see as we go into 2026. I mean, USMCA is something that will be rehashed out, if you will. And part of today is going to give us some breadcrumbs on what comes next. And we're all going to be glued to our screens as we watch and see how today develops.
For investors who are maybe watching what develops today or what doesn't develop, what would you kind of suggest investors keep an eye on? What sectors?
Yeah, good question, Lindsay. So there's optionality in this market. I mean, obviously, yields are still high. The market is mostly shrugged off this government shutdown, which has been really interesting. We haven't seen a lot of volatility in the treasury space or in yields, if you will, in the bond market. Equities are still near all-time highs. You talked a little bit about the pullback today. Maybe investors taking some gains off the table and realizing that this shutdown could last a lot longer than we think, potentially weeks. But at the end of the day, there's still a lot of momentum. We're seeing M&A activity pick up, pro-business environment, and so it's something we're still excited about. But in the short run, we wouldn't be surprised to see volatility. And if anything, that's opportunities for folks that have been on the sidelines or have capital to deploy to look at these really interesting themes, whether it's AI, or allocating capital to some hedges of fixed income. You talked a little bit about gold at all-time highs. So there's a lot going on in this market. It's keeping us well caffeinated.
And just quickly before I let you go, we just had a quick look at the U.S. markets. Also, TSX trending down today. You mentioned, potential for more volatility in the markets. Do you think that's what we're seeing today in response to this meeting?
Well, definitely. I mean, the market's been on a tear for the last 5 or 6 months. And we know that markets don't go straight up. We do get volatility. We do get pockets where the market pulls back. And that's not necessarily a danger sign. It just means that markets got a little bit ahead of themselves, specifically with this AI momentum. Everything's basically AI nowadays. And as we go into third quarter earnings, the bar is set really high. And that could really shake up this momentum to the upside that we're seeing, where the markets could turn quickly. And frankly, Lindsay, we're not getting the government data that we're used to. The Fed has primed us to watch data very, very closely. And we haven't got some of the data that we like to see, specifically as the government shut down. So we're going to be watching it closely. We're not holding our breath, but we're definitely expecting some volatility going forward.
Okay, so good to get your insight today. Thank you so much for joining us. That was Alonso Munoz. He's the Chief Investment Officer with Hamilton Capital Partners.